Back with you on the Market Day Report. I'm Marlon Bowling with you. Happy Monday to you. Thanks for joining us here on RFD TV and Rural Radio. That's channel 147 on Sirius XM. Always glad to be with you. Thanks for making us part of your day. We always look forward to visiting with you about the markets. And as we look at our opening trades here on the futures, let's go take a look at the corn right now. Well, it's doing about the same thing that it did in the overnight trade. We're showing gains of a little over 3 cents. We saw that overnight, and it's continuing into the daytime session here in the early going this morning. Right now, September corn is trading 3 3/4 higher at 326, and it's toward the upper end of the range of the overnight trade. We had a high of 327.5. We're at 326 now. December, 336.5, and that is 3.5 higher. On the soybean trade, we'll flip over there, and we have September. How about this? 20 higher at 10.19 after that extremely bearish report that came out Friday. November soybeans 20.5 higher at 10.02 1/4, and January at 10.02. The first 3 months are now all above $10. Well, let's bring in Dewey Strickler of AgWatch Market Advisors in Franklin, Kentucky, to sort this all out. And Dewey, this is one of those deals where it's, I guess it's kind of a sell the rumor, buy the fact type thing when that report came out here last Friday. What do you think?
Well, sort of like that, Marlon. First of all, there was nothing in the report that was friendly at all here, but you have to kind of look and see where the funds were at that time. You had in corn, the funds last week had increased their short positions to about 600 million bushels. The report came out. You had some good technical action. They were forced to cover some positions. Look like they're still covering a little bit here today. And for the past few weeks, the funds have been increasing their longs in beans. Now, they're long 525 million bushels, which is not a big position by any means. They've got room to add to it. You got a little increased demand that showed up on the report. I would fully expect that. In wheat, you've got the funds are short about 655 million bushels. That's about 100 million bushels short of the record there. I think wheat is pretty well squeezed out here. Technically, it looks pretty decent, so I would expect the wheat to see some short covering. So I think really the reason these markets are up is more on what the funds are doing than obviously what the fundamentals are.
Well, Chicago wheat, as you mentioned, right now in September, it is trading 6 higher. We have December now 4.5 higher at 444.5. What about Kansas City wheat? We'll switch over there. And on the Kansas City market, we have September 2.5 higher at 418 3/4. And you have your December now 2.5 higher at 444 3/4. Meanwhile, if you look at the Minneapolis spring wheat trade, here we're 3.5 higher on September, and December 2.5 higher at 518.5. So gains everywhere you look in the grain side here this morning, and that would seem to indicate that the funds are wanting to get back on the long side, maybe.
I think that probably is. At least they're going to lighten their load a little bit as far as their shorts in corn and also in wheat. And I would expect them to add somewhat to their bean longs.
Okay, now I do want to take a quick peek here, Dewey, if you don't mind, at the cotton market. Of course, cotton didn't react real well after that report came out. Overnight, it was trading firmer, but now we've done an about face for the second time. And now we're going lower again. So it has been on both sides of unchanged here, if you include the overnight session. December cotton, the new crop contract, had a high of 71.51 overnight. Well, now we're at 70.45, so we're over 100 points off of that, and now we're down 20 points from where we closed and settled on Friday afternoon. Interesting development there. So we'll pause for a little break. And Dewey, I want to ask you about the livestock market activity. It's sending mixed signals, that's for sure. We'll talk about all that when we come back right after this. Well, we're back with you on the Market Day Report, the Monday edition. I'm Marlon Bowling. We're talking right now with Dewey Strickler of AgWatch Market Advisors. Dewey is based in Franklin, Kentucky, and we're going to take a look now at our livestock market action. And Dewey, we had a little bit of cash cattle activity that did shake loose on Friday. It was late Friday. The market volume didn't seem to be that heavy, but it appeared that the trade was basically about steady to maybe a little firmer than what we had the week before, and that would be a little better than what we saw the day before in the cash trade.
Yeah, that's right. I think we're still trying to sort things out here. I mean, when you look at the cash and where the traded and look at the futures are at a discount here to the cash market, which is supportive. And your beef prices were higher here last week, so that's given the market a little bit of support here. Technically, we look a little weak today. You might see your October fats come back down into the area of about 112 here.
112, really? Okay. How soon do you think that could happen?
Could be later this week, first part of next week.
And then what? What if it does fulfill that?
I think we're going to eventually move up here to about 120.
Oh, okay. All right. So you think that would bring new buying in there?
Yes, I think so.
Okay, what about the feeders? By the way, October is 32 higher right now in the live cattle. Now on the feeder side here, we have September 13 higher at 147.68, but it's the only one that is higher. All the others are either unchanged or about that much lower. So very, very timid trade here in the cattle market today. So almost, I guess you'd just call it narrowly mixed here in the feeder cattle trade. Of course, we do have a cattle on feed report coming out on Friday. Do you think that's going to weigh into this at all?
Well, it very well could. When you look at the October contract of feeders, we've got some support here at 142 and change. A trend is obviously up here. I could see the feeders trying to work up here maybe at about 149.
All right. Well, and of course, we did actually have some news that came out from USDA that would have been Friday afternoon. It indicated what the beef cutout values would have been at that time. And we can take a look at that. If I recall, that was kind of a divergent message that USDA sent out when that number came out, because we had choice cuts down 39 cents. Selects were up 80 cents on the day, so it did narrow up that spread quite a bit. But with this wholesale market, the way it is currently situated, do you think the value of the dollar chopping around like it has been doing is going to have much impact on that?
Probably not for a while. The dollar is just in a broad trade range. I've said before that I look for the dollar to move up to about the 103, 104, 105 area in time. I think it's going to be a little bit later than I originally anticipated, but it's going to get there, and it will have an impact on the meats and definitely will have an impact on the grains.
All right. Currently down 170 points on September futures on the dollar index. Stands at 95.510. On the lean hog trade, we'll take a peek over there. And on the hog futures, the October contract is now your lead month, and it's up $1.15 again. Wow, look at that. 61.15 is the last trade, within about a nickel of its high of the morning. December up 65 cents. Are you a fan yet, Dewey?
64.5. Here we come.
Really? On October?
On October, yes.
Excellent. All right. Well, thanks for the predictions and the analysis on the markets. Good to visit with you once again. Look forward to the next time, Dewey. Dewey Strickler with AgWatch Market Advisors in Franklin, Kentucky.